Salam everybody, this is Investor Sheikh back at it again with another video. And today's Halal Stock Pick of the week is Kimberly-Clark, ticker symbol KMB. Stock price is currently at $132.17. So it currently has a $44.9 billion market cap. It pays a dividend of $4.23. The 52-week low is 109.87 and its high is 156.53. So right now it's currently in the middle. PE ratio is 19.05 and the earnings per share is $6.88. So this is a dividend growth stock and a dividend aristocrat. Now, if you don't know what a dividend aristocrat is, it is a dividend paying stock that increases its dividend for 25 or more consecutive years. And Kimberly-Clark is one of them. So what Kimberly-Clark is a company that engages in the manufacture and marketing of products made from natural or synthetic fibers. It operates through the following segments: personal care, consumer tissue, and KC professional. Personal care segment offers disposable diapers, training and youth pants, swim pants, baby wipes, feminine and incontinence care products, and other related products. The consumer tissue segment produces and sells facial and bathroom tissue, paper towels, napkins, and related products for household use. KC Professional supplies workplace supporting products such as wipers, tissues, towels, apparel, soaps, and sanitizers. The brands include Depend, Huggies, Kleenex, Kotex, and Scott. So this is an essential company because they are responsible for manufacturing and selling these essential products that you will see at the local grocery store. And of course, here at Investor Shake, anything essential is a stock worth owning. So when you look at these brands, Depend, Huggies, Kleenex, Kotex, and Scott, those names definitely do ring a bell. You've definitely passed by these products dozens of times when you're at the grocery store. Scott is toilet paper, Kleenex is facial tissue, Huggies is diapers. So this is a holdings company. They own all these brands that you see stocked in the shelves at all the major stores. Walmart, Target, Kroger, you name it, you'll see these products there. So we know that Kimberly-Clark is a company that owns a lot of these essential products in their respective brands. So in this article that summarizes Kimberly-Clark, they say that Kimberly-Clark is a quality dividend stock. The company has paid dividends for more than 85 years, including 47 consecutive annual increases, and its payout appears to remain very safe with low to mid single-digit growth potential. So this will be a stock that's going to grow over the years. Management's long-term financial targets for the business appear reasonable and very supportive of the dividend as well. So the dividend is pretty healthy. There's no chance for it to go down. While Kimberly-Clark will continue battling a declining birth rate in America and faces intense competition globally, its established market positions, strong brands, timeless products, and excellent balance sheet should keep the business relevant for years to come. Simply put, Kimberly-Clark continues to possess a number of strengths that make it look like a reasonably appealing holding for a defensive income portfolio. So let's take a look at the financials for this stock. So looking at the stock's performance over the past 5 years, it's been a pretty volatile price movement, considering that 5 years ago the stock was at 136 and then dipped. So it was at its lowest around some mid 2018, and it started to go up, and then the crash in March caused it to go down, and then it went up as high as 160, and right now it's at 132. So if you held onto this stock since 2016, you would have seen very minimal growth. But this is also a dividend payer, so you will be generating dividend income just for holding this stock. So it's $44.77 billion market cap. And looking at the performance, they have had positive revenue year after year. It's been staying pretty steady for 3 years in a row, but 2020 has seen a slight increase. The earnings has been positive as well, and it's been staying pretty constant. And then you look at the quarterly, you see positive earnings, positive revenue, slight decrease in Q2 and Q3, and a slight increase in Q4 of 2020. So analysts are saying that it's between a buy and a hold, with price targets as high as 173 and as low as 122. So I did mention that this is a dividend growth stock, and in 2020 the dividend payout for the year was $4.28. So if you were to go all the way down to 1995, they paid an annual payout of 67 cents, but this was for 2 quarters in 95. So the quarterly amount was 22.5 cents each quarter. So if you scroll up and you see the dividend growth over the years, so in 2018 we've seen the dividend payout reach $1 for the quarterly payment, which is pretty significant. So if you were to hold the stock for 20 years, you would pretty much have quintupled your dividend payouts. So essentially they've paid you 5x over time, which is fascinating if you're a long-term investor. So the latest dividend is going to be $1.14. So this is one of these stocks that is gonna grow over time. You're gonna get higher dividends each year. There's not gonna be much growth. You're not gonna double your money within a few years. This is slow capital gains growth and slow dividend income growth. So, with that being said, I currently do not have a position on this stock, but if you currently have a dividend portfolio, I would suggest adding this stock to your portfolio. I'm not a financial advisor, so please do not buy this stock simply because I'm talking about it. Please do your research, and if you believe in this company in the long term, by all means, build a position or add it to your watch list. This is Investor Shake, checking out.